Over the last 2 weeks since the election of Mr. Trump, reflation assets have been very strong. The dollar's been up, interest rates been up, and the market has also been up. Is it too quickly, too far? Well, we believe that over the coming weeks, we should see a bit of a counter trend materializing. We'll start with the euro dollar. The euro dollar on this hourly chart or the perspective of over the next few weeks. We can see this strong downtrend since the beginning of November. It is slowly getting into its target zone between 106 and 104.75. It's not quite oversold yet on our risk indicator. The timing tells us that it's probably a few days to a week to go before finding an oversold condition that could create a bounce. Looking at the daily chart or the perspective over the next few months, we are slowly getting oversold, but we are just in the initial stages of this situation. As you could see, our targets could extend down to 105, down to possibly 102 over the next few months. That said, to corroborate this oversold condition, we are also at stress on the envelopes. So this might be an interesting environment to see a bounce. Longer term, on this weekly chart, or the perspective over the next few quarters, we are still labeling it as a correction up. That said, it is partly also the prices are already resuming the downtrend. We don't think this can go too far because our risk index is already oversold. So there's probably a bit more potential as the daily suggested, but in essence, we are pretty much towards the end of this long-term move. Looking at the summary on this investor's view, we could see that we have a long-term corrective bull and two bears on the medium term and the short term. So we are in a consolidation period in what is still a very, very weak uptrend. So a long-term bull, just a correction, and a daily with still some potential down to 105 or 102, and the hourly, which should find an intermediate bottom possibly over the next week. Turning to dollar yen, a similar picture. The yen has been also very strong since the election. We can see that it's slowly getting into its targets, and that also here the timing tells us there's probably another few days to a week to go. The risk index is getting into the overbought situation, so it's slowly getting exhausted and preparing for a counter trend starting perhaps next week. Looking at the daily, this move doesn't seem over yet, or even far from over. We could see that there's no stress on our envelopes, we're still in the middle of the range, and that our risk index is moving up and also in the middle of the range. Targets possibly over the next few months between 118 and 123. The weekly chart, after the strong correction down that we've seen since the second quarter last year, is now labeled as a correction down which is over. And prices are now resuming the uptrend, possibly moving higher over the next few quarters. If we take the summary, it's still a correction down at the moment, but we are rapidly exiting this correction on the daily and the hourly charts. The hourly chart is showing that we're possibly getting towards an intermediate top, and the daily after that still has quite a bit of potential. We slowly wanted to have a look at rates, or inversely at bonds, and this is the 7 to 10 year Treasury bond ETF from iShares. We could see that it topped out close to the overbought situation on our weekly chart in July, and that it has since been moving down on our daily and on an hourly. Similarly to the other charts, the daily is still pointing towards possibly early next year for a low or top on rates. Yet most of the move has been done over the last month or so. Also here, over the hourly chart, we could see that we're slowly getting into exhaustion. We're close to oversold on our oscillator, and our targets have been done. So also here, over the next 2 weeks, I'd say, we would expect a bounce. Now looking at gold, rising interest rates, a rising dollar is not good for gold. And effectively, over the last few weeks, since the election, following a short spike on the news and then a strong reversal down, we can see that at the moment it is still working down towards below 1200. I believe we are below 1200 at the moment. Our targets are telling us that we could move down towards 1195. Our risk index is not quite oversold, so there is possibly another week or so of work here. But we're slowly getting exhausted on this one too. Looking at the daily, this exhaustion comes into the boundaries of our corrective targets. Our corrective targets, or the lower end of them, usually serves as support. It is slightly above 1200, or it's a give or take a few tens of dollars, but we're pretty much there in a zone where we can see some support on these corrective targets. Now looking at the weekly had moved up quite aggressively since the fourth quarter last year. It is still only a correction for now. And so any move up that we could expect from this 1200 support level would probably remain corrective and be another bounce up into this gray zone between 1300 and 1430. So to summarize it, well, we're in a correction up on gold. This correction up doesn't seem over, but it's only a correction up. We've had a counter trend which was strike wrong, possibly get into his support levels, and the hourlies probably have another week or so to go to find an intermediate bottom and start a bounce into early December. Now looking at the S&P 500, this is the mini S&P future. We could see that the Trump news was at the beginning not well received, and then the strong reaction that followed it was quite amazing. We can see that at the moment it is slowly getting into its targets on this hourly chart or the perspective over the next few weeks. We could see some stress on our envelopes and the risk index in the overbought, so we could see a pause in this rally over the next couple of weeks. That said, the daily still has some leeway to move up on its impulsive targets, possibly to above 20 or towards 2250, and the risk index is still only turning up in an inverted saucer-like configuration that still needs to move up into the overbought zone. So there's probably another couple of months to go here before we actually end this strong move up that we've seen since the election. On the weekly chart or the perspective over the next few quarters, it is expensive, but similarly to the daily, we are also here not in the overbought, and there's the leeway to move up into the overbought towards possibly January or February. So with all three trends still moving up, this is still a strong case over the long to medium term. Over the short term, we believe that, as with other assets, we're coming into some exhaustion of this very strong move since the beginning of the month, and we could see a bit of a counter trend materializing probably starting next week. Thank you very much, and have a good week.